Good morning. I am Mark Sebastian. This is the Option Pit AM Volatility Report, and it's good to see everybody. So just a quick reminder, go to optionpit.com/bootcamp, sign up for the boot camp that's coming up. So let's talk about the market. Well, we were up huge this morning on basically Janet Yellen's speech yesterday, which was definitive. I've been saying for some time, all we've needed was the market to be definitive, or def- something definitive out of the Federal Reserve for the market to feel much more comfortable. And then there you have it. And then, of course, John Boehner throws a wrench in the market. So we're up huge. And then John Boehner throws a wrench in the market, deciding to resign. So now the question is, does that make a government shutdown more or less likely? And that was what has people scared. And that's why we've given away a chunk of this gain. All right, that's why we're barely up 10 points, as opposed to at a period of time we were up way more. I mean, if you look at a chart of the VIX today, I mean, look at this. I mean, we were down to about 21 on the open, or really, we're down to about 21 on the open, and we're all the way back over 22, and that's because of John Boehner. So that's kind of the big question. Still definitely softer in the VIX futures, but not as soft as we were. At one point, VIX futures were down $1.40, and now that's been cut in half. Certainly softer in TLT. I mean, it was up huge yesterday, and then bonds have clearly softened, as they should. Gold, also another one that's much softer than it was yesterday. Gold was up huge yesterday, and now pretty much off. Off about giving it back about a third. I think it's likely to give back more. Yellen was somewhat hawkish, expecting a rate hike this year. So that would explain the weakness in gold. Gold should probably move back toward 108. I think the next couple of days could be very soft for gold, very soft for bonds, and potentially stronger for the S&P 500, which is now back over that key 1934 level that it keeps chasing. So now it's likely to make a run at, back toward 2000. The big quote unquote Fibonacci everybody is watching is 2003. I doubt the House is still going to shut down. I'm guessing no government shutdown. Maybe part of his resignation was that they would agree not to shut things down. It's still a little shocking that he's decided to step down. But that is why we're acting the way we are. So where is there some weakness? Well, if you look at kind of the major sectors, they're all up except for XLV, which is pharmaceutical, which continues to be weakened by biotechs. All right, looking at biotechs, they're down, not as much as they were. Some of the retailers are up small, but not huge. Retail still looks a little weak. And some of the specialty retailer, the mid-priced, not doing much at all. And, continuing to look somewhat soft. So that's kind of where I see things, where there's real strength. Goldman had been getting creamed. JP Morgan had been getting creamed. Those are all doing much better. Huge move out of JP Morgan. And we continue to see some strength out of Facebook. And, of course, some of the specialty cosmetic groups, things like that, are doing particularly well as well. So on the day, I think the market will move its way higher. Volatility will come in more. And we're going to see a much softer gold. And I think bonds will soften throughout the day. I look at TLT only being down $1 as a potential fade. Okay, folks, on that note, I am Mark Sebastian. If you've got questions, you can email me, mark@optionpit.com, or you can call me 888-TRADE-01, and I will talk to you soon.